Have you heard the word Esusu or Ajo? For many Nigerians and indeed across much of Africa, these words are more than cultural relics. They describe a survival system, a collective pool of money where friends, families, and business partners contribute in turns to pay school fees, fund a market stall, or cover emergencies. It is the financial heartbeat of the everyday African. But today, Esusu is no longer just about raising capital for weddings, education, or family projects. It has also become a safety net for one of the continent's growing crises. Repaying debt, whether from banks, loan apps, or the ubiquitous money lender down the street. The bigger picture, across Africa's cities and villages, billions of dollars exchange hands daily, but not through banks. Instead, through street lenders, rotating savings clubs, and digital credit apps. These hidden networks are Africa's shadow banks, sustaining millions, yet trapping many others in unending circles of debt. In every African setting, the stories echo each other. For the market woman, the cooperative is her bank. For the border rider in East Africa like Kenya, Uganda, Tanzania, or Okada rider and taxi driver in Nigeria, the money lender is his lifeline. For the young professional, it may be the faceless loan app on his phone.
I just see them as the ones we can use for, as a fast cash. Because there was a time I had to borrow money for, when I lost my phone, I had to lend money. I lent around I think 500 or so, and the money I'll be paying back was very, very ridiculous. I'll be paying $1 million back because I had to pay back in a year.
The scale of informality. Studies suggest that more than 60% of Africans rely on informal credit, from cooperative societies and micro-loan groups to outright loan sharks and fintech apps. In some countries, these shadow systems move more money than the formal banking sector combined. And while they provide access where banks do not, the cost can be staggering. Interest rates sometimes exceeding 200% annually, collateral seized without mercy, and threats delivered through phone calls and social share.
They will disturb you when it's 2 days to the time you have to pay, and you don't have the money. They will keep on disturbing, they will keep on bugging, they'll keep on calling with different numbers.
From harassment to bullying to defamation of character, cyber stalking, and threats to life. How do you start threatening someone because they are owing you? You keep on sending messages to their contact list and telling them this person is owing, this person has AIDS, has HIV. You spoil their personality, you destroy their character.
Governments stand at a difficult crossroads. Overregulate and you risk cutting off the only financial lifeline for millions. Underregulate and you allow predatory lending to flourish unchecked.
One thing I would want to say is for government to really look into the activities of the loan apps and maybe regulate. They need regulations. So if the government cannot bound them outrightly, then they should make policies, make law, and make sure it's implemented and enforced.
Fintech startups claim to offer a middle path, using technology to expand financial inclusion. But even here, the promise often comes with a price. Thousands of young Africans are sliding into digital debt traps, lured by instant loans that soon spiral beyond their ability to repay. A global question. This is not just an African problem. From Asia's microcredit systems to Latin America's community lenders, shadow credit economies are global. The question remains the same everywhere. Who protects the vulnerable when the poor are priced out of formal finance? The human costs. Behind the statistics are real lives. A trader who borrows 50,000 naira to stock her store and now owes almost double. A young man who clicked instant loan on an app only to receive daily threats on his phone. A cooperative member who risks losing her contribution because another member defaulted. These stories expose the fragile balance between resilience and exploitation. Africa's hidden banks reveal both strength and risk. They testify to the creativity and resilience of people who refuse to be locked out of opportunity. But they also expose a darker truth, that the systems meant to empower the poor often tighten the grip of poverty, from Ajo to apps.
Yeah, I feel it is faster. People just feel like they can just stay in their house. They don't need what's it called, too much document. They don't need too much formality. So they just, okay, download this particular loan app, okay, blah, blah. They'll read everything that they want to read, and they'll just, what's it called, submit some documents that they'll submit. They'll process it maybe within a day or 24 hours, or at most 48 hours then. I feel that's why people don't go to bank. I prefer that. Yeah, than using the banks now.
Africa's shadow banks are here to stay. The real challenge is not whether they exist, but whether they will serve the people or prey upon them. Grace Komalafe, Souk Perspective.